you cannot do the question under time value of money unless you've understood that topic or you have the concept. So we will start with a question for last sitting. Last sitting, we had a question on time value of money. So August 2025 paper, kindly check the August 2025 paper. August 2025 paper. There is a question on time value of money. That is what I want us to start with. So just a minute. I want to believe you are there. August 2025. Question. Question 2C. Question 2C. August 2025, question 2C. That's a question on time value of money. It's a question on time value of money. So just a minute. So now, August 2025, question 1C. Not one. Question 2C, sorry. Question 2C. The question reads, assume that you have just won a competition prize with the following options. Assume that you've just won a competition prize with the following options. Option A, lump sum payment of shillings 25.8 million in 5 years' time, with lump sum payment of shillings 25.8 million in 5 years' time. Option B, a sum of shillings 1.6 million paid as follows. Oh, that is 16 million.
Consider the ordinary shares which were acquired. So therefore, what you're told is that this company, which is called 𝐎𝐶𝐄 Limited, basically acquired 80% of the ordinary shares of the company which is called what? Of the company which is called 𝐻𝐍 Limited. On which date? On 1st of October 2024. On 1st of October 2024, automatically this now will be the parent company. This will be the subsidiary. But if you go back to the same point, paragraph 1, sentence 2, we are told also on the same date, 𝐻𝐍 Limited also acquired 50%. It also acquired 50% of 𝐻𝐍 Limited, 10% raw notes. Now, in this case, I've said, in coming up with a group structure, what we consider are the ordinary shares which were acquired by the investor company, the investee company. Though I'll be able to explain how we deal with those particular raw notes, which were acquired by the parent company in what? In the subsidiary. But when coming up with a group structure, we consider the percentage ordinary shares or equity shares which the investor company acquired in who? In the investee. So therefore, that is basically a group structure. This is the parent, this is the subsidiary. Then even before we move maybe to the additional information, it is also important for you to identify the date we are required to prepare the group account. When are we required to prepare the group account? Where can we get that date? That date, we have it in the requirement. Can we go to the requirement? In the requirement, we are required to prepare the consolidated financial statement for the year which ended 30th of June 2025. It automatically means that this year, the next year here will start 1st July. This year started 1st of July 2024. 1st July 2024. So we need to determine, was this subsidiary acquired before the start of the current year, or was it acquired during the current year? You need to check the date of acquisition. You can see the date of acquisition is 1st of October 2024. 1st of October 2024 is basically within the current year. Within the current what? Year. It basically means that our subsidiary here, that is Swara, was acquired in course of the current year. So it was acquired during the current year. How many months to the end of the year? How many months do we have here? We have October, November, December, January, February, March, April, May, June. So basically this, I think, should be 9 months. 1, 2, 3, 4, 5, 6, 7, 8, 9. Because in 2024, we have how many months? We have 3 months, October, November, and December. In 2025, we have 6 months, from January all the way to June. So this means that our subsidiary here, that is Swara, was basically acquired 9 months to the end of the year. Now, why is it important for us to be able to know that? The reason why it is important to know the date this company was acquired is because when preparing the consolidated statement of profit or loss, and this is something we said in our previous class, we are going to take the revenue and expenses of this subsidiary, not for the whole year, but basically for 9 months. So we will take the revenue and expenses of this one, we apportion that on time basis. We are going to multiply the revenue and expenses of this company with 9 all over 12. But now, if the subsidiary was acquired before, if it was acquired before the start of the current year, then when preparing the consolidated statement of profit or loss, we take the revenue and expenses of the subsidiary for the whole year because it was not acquired during the current year. But anytime a subsidiary is acquired during the current year, only consider its revenue and expenses from the date it was acquired. You apportion that on time basis. So we are going to apply that in preparation of what is required in Part A. Now, I will equally explain how we are going to use those particular row notes which were acquired as per paragraph 1. But let's move now to the additional information. Take into account, we know that this is a parent, this is a subsidiary. In the additional information, number 1, we are told the fair value of Swara Limited assets was equal to the book value, with an exception of an item of plant, which had a fair value of 800,000 in excess of its book value at the date of acquisition. So this is something you'll come across in all questions for group account, and is always given in note 1. So we are told the fair value of Swara Limited. Swara Limited, we have to remember, is a subsidiary. Was the fair value of the asset of Swara was equal to the book value, with an exception of an item of plant whose fair value was 800,000 in excess of the book value at the date of acquisition. Remember, in our previous session, we said that on the date this company is acquired, the subsidiary is acquired, this company revalued the assets. And actually, we said that process through which the subsidiary company revalued the asset, we refer to that as the fair value adjustment or the fair value exercise. And actually, we say that once this company has revalued the asset, the subsidiary company does not account for that. As a result of that, when preparing the group account, we talked about 2 adjustments which we make. Number 1, we make an adjustment relating to the revaluation gain. Number 2, we have to compute depreciation under charge. And basically, that's what we need to do as far as that point is concerned. But before we do those 2 workings here, let's finish the entire statement. So we are told in the other sentence, the remaining useful life of Swara Limited plant at the date of acquisition was 4 years, and this period has not changed as a result of the acquisition. Depreciation of plant is on straight-line basis and charged to the cost of sales. Swara Limited had not adjusted the value of plant as a result of the fair valuation of the asset. So this is exactly what we said in our previous class. This company revalued the asset, but never accounted for that. We need to make 2 adjustments in relation to that. So first of all, we refer to that as the fair value adjustment, or basically we refer to that as the fair value exercise by this company here, that is Swara Limited. Swara Limited. So the first thing we need to do here is to determine the revaluation gain. And actually, there is somewhere we are told that the fair value of that plant, that should be in sentence number 2. Actually, in sentence number 1, we are told the fair value of this item of plant was in excess. The fair value was in excess. The fair value was more than the book value. The book value is the same with the carrying amount, with an amount of 800,000. If you check the figures given in our statement of profit or loss, in our statement of financial position, they are in thousands of shillings. In thousands of shillings means that the last 3 zeros are omitted. We need to be consistent. Any figure which is given in the additional information, we must also omit the last 3 zeros. So this company valued plant, and the fair value for that plant was more than the book value or carrying amount with 800,000. Now this one, we refer to it as the revaluation gain. We refer to that as a revaluation gain. Was it accounted for by the subsidiary company? No, the subsidiary company didn't account for this. And therefore we say, in preparing the consolidated balance sheet, consolidated statement of financial position, we say that this one we added to the group PPE. Once we have added the PPE of this plus the PPE of that, we add 800. Number 2, we say that this one is a revaluation reserve to the subsidiary. But because it's a revaluation reserve which occurred on the date of acquisition, this one we say is a pre-acquisition revaluation reserve. Make sure you write that in full. It is a pre-acquisition revaluation reserve. Being a pre-acquisition revaluation reserve, we are going to use that in the computation of goodwill. When computing the goodwill on acquisition, this will be one of the pre-acquisition revaluation reserve. Sasa, yes. Number two, in addition to this revaluation of assets by the subsidiary, we need to compute the depreciation other charge. Depreciation other charge. And basically, I gave you a formula, which we said you should always be, remember this. We said we take the revaluation gain, we divide that with the remaining useful life, and then we multiply that with the proportion of time. Proportion of time, of which we said proportion of time, this is basically the number of years, the number of months we have between these 2 dates, date of acquisition and date of consolidation. And we know between the date of acquisition, which is this date, because this is now the date of acquisition abbreviated as DOA, and this date, the date we are required to prepare the group account is the date of consolidation. So how many months do we have between these 2 dates? Date of acquisition and date of consolidation. In our case, we have 9 months. We have 9 months. That is the proportion of time. So therefore, here we are going to compute the depreciation other charge for 9 months. So we use this formula here. Revaluation gain, which is this one, divided that with the remaining useful life. The remaining useful life for this plant is given as what? In note number 1. The remaining useful life of this plant, who can be able to see that in note number 1. Remaining useful life of this plant, we are told how many years? 4 years. I hope you can see that in note number 4. So then we need to multiply this with the proportion of time. The proportion of time here, we are saying we have 9 months, but basically 9 months, we take that as 9 all over 12. We are interested with the depreciation other charge by the subsidiary for 9 months. For 9 what? Months. So let's compute this one. And I think this one should be 200. 3/4 over 200 should be 150. Should be 150. Should be what? Should be 150. Now, this depreciation other charge, which items will be adjusted with this? Now, 3 items. 1, in preparing the consolidated statement of financial position, in preparing consolidated balance sheet, we say that this one should be deducted from the group PPE. So we will rest this from the group PPE. Number 2, we also deduct this from the retained earnings of this company. This company undercharged depreciation. As a result of that, its profit was overstated. Number 3, when preparing the consolidated income statement, this one will be added to the group cost of sales. That's why you can see in that particular point, number 1, we are told the depreciation is charged to the cost of sales. Being charged to the cost of sales, this one we are going to add it to the group cost of sales in preparation of consolidated statement of profit or loss. Sawa? Yes. Now, this is an adjustment you must be able to understand, because you'll be able to see in all questions for group accounts you are going to do, you will be given this information that on the date of the acquisition, the subsidiary company revalued the asset. It never accounted for that. So you have to recall that is a depreciation, a fair value adjustment, or is a fair value exercise. And which two adjustment do we make? Adjustment in relation to the revaluation gain, adjustment in relation to depreciation, other charge. Sasa, yes, you have to remember this. RIN, that one is given in note number 1. Is given in note number 1. The remaining you see right. Yes. So those are basically the adjustment. We are done with that. Let's move to point number 2. In point number 2, what are we told? We are told that in the post-acquisition period, we'll talk about the post. Post we know is after. So post-acquisition period, we are referring to this period here. The period after our subsidiary was acquired. We refer to this as a post-acquisition period. But this period here, we refer to it as the pre-acquisition. We refer to it as what? The pre-acquisition. This is the post-acquisition period. We are told in the post-acquisition period, TUI Limited, which is basically our parent, sold goods worth 3 million to Swara. Now, this one we refer to it as intra-group trading. Let's have that here. We basically refer to that as intra-group trading. Intra-group trading, or basically intra-group sales. And actually, we say that anytime we have sales between these two companies, between the group members, this one should be eliminated. So the sales which were made by TUI to Swara, the goods had a value of 3 million. But remember, we are working with all our figures in thousands of shillings. We take that as 3,000. So now this one, because this company accounted for that as sales, whereas this company accounted for that as purchases, and purchases we say is part of the cost of sales, we say this one should be deducted from the group sales. So after not sales, let's talk of revenue, because I don't think we have sales, we are given revenue. So we left that from the group revenue. After adding the revenue for this and that, we left 3,000, and also we deduct this from the group cost of sales. After adding the cost of sales of this and that, we left what? We left 3,000. So that one, or that is the adjustment which is made in relation to any sales between the parent and who? The subsidiary. Then we say, anytime you see these sales between the parent and the subsidiary, mostly you'll also come across the two other adjustments. Adjustment for unrealized profit and adjustment for amount of intercompany debt. Because we said the company which made the sales, this one, automatically made the profit. But we say that profit can only be realized if the goods which were sold to these, all of them will have been sold to third parties. If therefore you're told some of the goods are not being sold, they remained in the inventory of Swara, you compute and release profit. Number 2, you can also be told that Swara had not fully paid for those goods. So that gives rise to amount of intercompany debt. And therefore, anytime you're given this, you're told there were sales between the group members, also will come across those two other adjustments. Like in the same point number, basically, let's go to point number 2, and we are told in sentence 2, we are told the goods had cost TUI Limited 2.25 million. Now, if you check on the information which is given in this question, you'll be able to see you can't be able to use the formula which I gave you in our previous session, because we said to compute the unrealized profit, we take the unsold goods times the gross profit margin. Gross profit what? Margin. But in our case, I don't think you can use this one. You can use this, but the approach will be quite long. I'll be able to show you how to compute the unleased profit, because the information of which you're given there is about the profit, because you're told these goods had a cost of to 𝐻𝐿 of 2.25. The reason why you're given that information is for you to know the profit which 𝐻𝐿 reported. 𝐻𝐿 sold goods for 3,000 or 3 million, but the cost for those goods was the 22.50. So that is the profit which 𝐻𝐿 reported. 750. That is the profit which it reported. Automatically, we say this profit will be realized if all the goods which were sold to Swara will have been sold to that parties. Let's see what you're told in that point. And you're told that during the year, Swara Limited managed to sell shillings 2.5 of these, of the 3 million goods from 𝐻𝐿 for 3,750,000. So that this question is maybe this information is not straightforward, but generally that information is to help us to compute something called the unrealized profit, unrealized profit on inventory. But I'll be able to show you it's quite simple. This unrealized profit is by the selling company. The company which sold the goods is 𝐻𝐿. So therefore, the unrealized profit is by who? By 𝐻𝐿. So the first thing maybe we need to determine here is the profit which was reported by 𝐻𝐿. And basically I've said is equal to the selling price minus the cost. So 𝐻𝐿 made a profit of 750. Remember, this profit of 750, this was for these goods. This is the profit which 𝐻𝐿 made based on the goods which had a value of 3 million. Now, the profit which will not be realized, will have now to be based on the goods not yet sold. Will have to be based on the goods not yet sold, because in our case, you can see we don't have the gross profit margin. So now in this case, can you be able to determine out of these goods which had a value of 3 million, how much goods had Swara sold to third parties as per the information which we have there? Sentence 2. Sentence 3. We are told Swara, during the year Swara Limited managed to sell 2.5 of the 3 million goods. So out of these particular goods here, Swara Limited had managed to sell goods which had a value of 2.5. The last figure which is given, 3.75, that is irrelevant, because whenever a company is selling goods, it will sell them at a profit. Now, what you are interested with is basically to know, out of these goods which had a value of 3 million, how much goods were sold. The goods which were sold were 2.5, meaning the unsold goods had a value of how much? Had a value of 500,000. So therefore, the profit which was not realized will be based on these goods not yet sold. The profit not realized will be based on the goods which were not yet sold. So 𝐻𝐿 made a profit of 750 based on the goods which had a value of 3 million. So what we are interested with is the profit not realized. The profit not yet realized is for goods having a value of 500,000. Is that the position? Otito? Mother, is that the position? Yes. So the goods not yet sold at the value of that. So what we need therefore to determine how much profit was made on these goods, which had a cost or which had a value of 500,000. Which had a value of 500,000. So we just cross multiply, then we divide. So we take 750 times 500,000 all over 3,000. All over 3,000. All over 3,000. All over 3,000. Yes, I've said, mother, the figure for 3,750,000, that is irrelevant in our case. That is just to confuse you. Sasa? That is just to confuse you, because what we just need to determine here is the profit not yet realized. We are saying this company made a profit of 750 after selling goods which had a value of 3 million. Now we are interested with the profit not yet realized. The profit which will not be realized will be based on the goods not yet sold. Out of these goods, which had a value of 3 million, which was sold to Swara, how many goods had Swara not managed to sell to third parties? The goods not yet sold were having a value of 500,000. That is our interest. So that 3.75 is purely to confuse us. Understand? Yes. So purely to confuse us. We are not going to use that information anywhere. Understand? Yes. So this will give us what? This will give us what? 750 times 5 divided by 3. And basically this will give us what? This will give us 125. 125. So this 125, number one, in preparing the consolidated statement of financial position, we left that from group inventory. Make sure you write that in full, group inventory. Number two, we will also deduct that from the retained earnings of the selling company, the retained earnings of 𝐎𝐶HE, and also when preparing the consolidated statement of a profit or loss, we add it to the group cost of sales. We add it to the group cost of what? We add that to the group cost of sales. We add that to the group cost of sales. We add that to the group cost of sales. Though, in that question, there is still another approach of computing that. In fact, you can use this formula here. Let me show you. Although that I think will be a little bit, it will be a wrong approach, though you can also be able to use this formula which I gave you. We said to compute the unrealized profit, we take the unsold goods, 500. That is 3 million minus 25. So we can also compute this because we know to compute the gross profit margin. We take the gross profit all over sales times what? Times 100. So we know that when 𝐎𝐶HE Limited sold the goods, the 𝐎𝐶HE made a profit of how much? Made the gross profit equal to the selling price minus that, and that will go. So this basically will give us 25%. So the gross profit margin is 25%. So therefore, to compute this one, we take the unsold goods times the gross profit margin, which is 25%. You should be able to get the same value here. Should be able to get the same value. Are we getting the same value here? Are we getting the same value? Are we getting the same value? Yes. So you can use either of the approach. You can use either of the approach. You should get the same value. So, and I think we are done with that point. Let's move to point number 3. In point number 3, we are told what? We are told the current account of the two companies had reconciled at the year end with 𝐻𝐶HE Limited owing 𝐎𝐶HE 187.5. So anytime you hear of the current account basically represents the amount of intercompany debt. How much amount is owed by one company to the other. So basically, whatever you're given in note number 3 is all about the amount of intercompany debt. That one is amount of intercompany what? Amount of intercompany debt. And the amount of intercompany debt in that case is what? Is 187,500. I will take that as 187.5. This one will be deducted from the group receivables. And number 2, we deduct that from the group what? Payables. That's what we said. And this particular amount of intercompany debt here is the same. The amount of intercompany debt is what? Is equal. The amount of intercompany debt is what? Is equal. No problem in that. We move to point number 4. And in point number 4, what are we told? We are told that the goodwill was reviewed for impairment at the end of the reporting period and had suffered an impairment loss of 75 million, which is treated as operating expenses. Which is treated as operating what? As operating expenses. Now, we need to compute the goodwill on acquisition of this, and that impairment loss is basically the decrease in value of goodwill. The decrease in value of what? Of goodwill. Basically, we're going to less that from the value of goodwill. once you have computed the goodwill. Once you have computed what? The goodwill. Sasa? Yes. So let's move to the other point. Point number 5. We are told TUI Limited and Swara retained earnings on 1st of July 2024. I hope you can remember 1st July 2024 is the start of the current year. The start of the current year was 41,31 to 50 and 13,50,000 respectively. No dividends were paid or declared during the current year. I'll be able to tell you where we're going to use those retained earnings, especially that one for the subsidiary. We are going to use that during the computation of goodwill. So no working which is required there. Number 6, we are told it is the group policy to value non-controlling interest at acquisition at fair value. Now that information basically is to help us to know which method we are going to use in the computation of goodwill. In the same point you are told, the directors valued the non-controlling interest at 625,000 at the date of acquisition. Now, based on that information which are given in note number 6, which method are we supposed to use in the computation of goodwill? Because we are told it is the group policy to measure the non-controlling interest at the fair value, and equally the examiner has proceeded to give us the NCI at fair value. Which method are we going to use in the computation of goodwill? Based on what we discussed in our first session, in our first class, that is last week on Saturday, which method are we supposed to use? Are we supposed to use the partial? Are we supposed to use the partial or the full goodwill method? It is the policy of the group to measure NCI at fair value. Which method are we supposed to use here? We are going to compute the goodwill using the full goodwill method. The full goodwill what? Method. That's basically why we are given that information. Finally, note number 6, we are going to use that information. Our goodwill will be the last working. We are told number 7, revenue and expenses are deemed to accrue evenly throughout the year. So the reason why you're given that information is for us to be able to know that when determining the revenue and expenses of this subsidiary from the date it was acquired up to the end of the year, we are going to apportion that on time basis. Remember, Swara Limited was acquired 9 months to the end of the year, and therefore we have said we will take its revenue and expenses for 9 months. How do we get the revenue and expenses for 9 months? We apportion that for on time basis. On time what basis? Because we are told in that last point, the revenue made in different months were equal. Sasa? Yes. I think we have that. What we need to do here as the last working is basically to compute the goodwill on acquisition. To compute the goodwill on acquisition. And remember, we are using the full goodwill method. We are using the full goodwill what? The full goodwill method. We are using the full goodwill method. So how do we compute the goodwill using the full goodwill method? First of all, here we need to have 2 columns. And basically our figures are in thousands of shillings. So here we said we start with the purchase consideration, which was paid by the parent company. And then to this, we add the NCI at fair value. So I think we have all these values here. So this one, we have it in paragraph 1. Let's go back to paragraph 1. How much amount was paid by the parent company in acquiring 80% shareholding in Swara? Paragraph 1. Paragraph 1. That one is an amount of 2,570,000. That is the purchase consideration paid by the parent. And then we have this NCI at fair value. And this one is given in note number. This one is given in note number 6. In note number 6. In note number 6, NCI at fair value. NCI at fair value is the 625. So we add those 2 values there. We add those 2 values there. What do we get? 2570 plus 625. And basically that will give us what? That will give us 3195. So having this, then we said we less the fair value of net assets which were acquired. Now, we say this is basically where majority of the students get this, the computation of goodwill loans. So here we said what you have to do is basically you compute what was the fair value of the subsidiary company net asset on the date of acquisition. On the date this company was acquired, what was the fair value of its net asset? And actually we said we compute that by taking this company ordinary share capital plus pre-acquisition reserves. Pre-acquisition reserves are the subsidiary company was having on the date of acquisition. So therefore, to compute this, we take the subsidiary company ordinary share capital. Where do we get this one? We get this one in the balance sheet of this at the equity. So can we go to the balance sheet, the statement of financial position of SWARA at the equity? At the equity, how much is the ordinary share capital of SWARA? The ordinary share capital of SWARA is basically 500. I hope you can see that. Is what? Is 500. Then to this, in case, for example, still at the equity there, where we have that share capital, there are other questions will also be given a share premium. In case you're given a share premium, unless told otherwise, we also treat that as a pre-acquisition. You can see SWARA Limited didn't have any share premium. And then what we also include here is the retained earnings. The retained earnings. Now, do we include the retained earnings in the balance sheet, which we are given below this? No. Here we must determine, or we include the retained earnings at the date of acquisition. We determine the retained earnings on the date of acquisition. The retained earnings on the date of what? Acquisition. So, and I don't think we are given that one. We have to compute that. I'll be able to show you how we compute this. But before we determine that, there is something else you should also be able to check, whether the subsidiary company revalued the asset on the date of acquisition. Did our subsidiary company revalue the asset on the date of acquisition? It is yes. I hope you can remember this point number one, that the subsidiary company revalued asset on the date of acquisition. And actually there was a revaluation gain of how much? Of 800. This revaluation gain, we have said, it is a pre-acquisition revaluation reserve. That's why you have to consider that here. As what? As 800. As 800. Someone is saying my board is not clear. Mother is saying Morimu's board is not clear. Yes, mother, I think it is your internet. I think it is your internet, mother. Yes, I think it is your internet. Now, there is something I've said here we are not given, and this is something you'll come across in all questions. In all questions whereby a subsidiary was acquired during the current year, the examiner will not give you its retained earnings on the date of acquisition. Now, what I want to do here, I want us to do here, I want to show you how we compute the retained earnings in case that one is not given. Because, can we go back to the balance sheet of the subsidiary at the equity? Let's go back to the balance sheet, to the statement of financial position of SWARA at the equity. I hope you can see we are given the retained earnings there. Now, the retained earnings which are given in the balance sheet of SWARA at SWARA, the amount of 21, this is the retained earnings at the end of the year. At the end of what? Of the year. Then there is another point. Can we go to point number 5? In point number 5, we are told TUI Limited and SWARA retained earnings on 1st July 2024. 1st July 2024 is basically the start of the year, because we know this year ended 30th of June 2025. That's what we know, and started on 1st July 2024. So we also have the retained earnings here, and we're interested with the retained earnings of our subsidiary here, that is SWARA. The retained earnings, we're given the retained earnings of TUI and SWARA, which is 41, 31 to 50, and 1350. 1350 is for Swara. 1350, that one. That is the retained earnings at the start. Now, what we are interested with here is the retained earnings on the date of acquisition. We know that the date of acquisition is 1st of October 2024. 1st of October 2024, these 9 months to the end of the year, and basically these 3 months from the start. If you count the number of months we have between these two dates, tuko na miezi tatu. Tuko na July, tuko na August, na tuko na September. We are not going to count October because you can see this one started, or actually the acquisition was 1st October. So tuna count July, August, September. So we have 3 months and what? And 9 months. So what we are interested with is the retained earnings here on the date of acquisition. And you need to understand this because it's something we come across in so many questions. Now, what we do, first of all, we go to the income statement of Swara. Can we go to the income statement of Swara? And specifically, we take its profit after tax. How much is the profit after tax of Swara during the current year? You get that from the income statement of Swara. Below paragraph 1, profit after tax for Swara, which is the same with the profit for the year. Yes, that one is 750. That one is 750. In fact, in most of the questions, the examiner will not have given you this, but you can see we are given that. But essentially what we know, in arriving at these retained earnings at the end, we take the retained earnings at the start, this one, 1350, and then we add the profit for the year, and we get this. Can you confirm whether that would be correct? If we take the retained earnings at the start plus the profit for the year, are we getting 21? Yes, we are getting 21. In most of the questions, the examiner will not have given you that. The examiner will give you this one. He will give you this one. Is upon you to determine this. How do you determine this? You take this minus that, you get 1350. But in our case, that one is already given. What we are interested with is the retained earnings here. How do we compute that? We compute that by taking the retained earnings at the start, 1350, and then we take the profit which was reported for the whole year, which is basically 750. Out of this, we compute how much profit was reported by our subsidiary from the start before it was acquired, because we're interested with the retained earnings there. So we know this is the profit for the whole year. Divide that with 12, and then how many months do we have there? We have 3. So multiply that with 3. That will give you the profit which was reported for these 3 months. Now, once you have taken this plus profit for 3 months, you will get the retained earnings on the date of acquisition. Yes, that's basically how we compute that, because you'll come across this in so many questions for group account. So many questions for group account. So that will give us the retained earnings on the date of acquisition. So we have 750 divided by 12 times 3. Then we add this one, 1350. And basically that is giving us 15. That is 7.5. Is that what you're getting? Is that what you're getting? Is that what you're getting? Yes. And then in our case, we don't have any other pre-acquisition reserve. We need to add all this. And basically, this will give us 28. That is 7 point what? 0.5. Point what? 0.5. I hope that is what you're getting. I hope that is what you're getting. And because we are using the full goodwill method, under the full goodwill method, we are interested with the net asset acquired by the parent and the NCI. Because we said under the full goodwill method, we compute the goodwill of the parent, the goodwill of NCI. Under the full goodwill method, you take 100% of this. But if we are using the partial goodwill method, we are only interested with the goodwill of the or the net asset acquired by the parent. We would have taken 80% if we were using the partial. But under the full, we take 100. So that will give us 2837.5. And basically, we less it from the value we have up there of 31.95. And basically, this will give us that 357.5. And because that is a positive figure, that one is basically known as what? Goodwill. Now, there is a point where we are told that this particular goodwill was impaired. So impairment loss is basically the decrease in value of goodwill. So that impairment loss should be deducted from the value of who? Of the goodwill. We need to deduct that from the value of who? Of the goodwill. Where do we have that information? We have that information in point number 4. We are told there was an impairment. That is basically note number 4. Note number 4, this goodwill had suffered an impairment of 75. So that one reduces the value for goodwill. So what do we get here? 282 point what? Point 5. Is that what you're getting? Is that what you're getting as the correct value for goodwill after deducting impairment loss? $357. We try to hurry up because of time. Yes. So basically that is the value for goodwill. And basically this one, we are going to recognize it as an asset, as an non-current asset in our consolidated statement of financial position. This one, impairment loss, this one is recognized as an expense. And I hope you can be able to see in that point number 4, we are told that this impairment loss will be treated as an operating expense. Will be treated as operating what? Expense. And I think in our case, basically we are done with the workings for the time being. So can we proceed and prepare what is required? We start with Roman 1. We start with Roman 1, whereby we are required to prepare consolidated statement of profit or loss, which is for the year, which ended 30th of June 2025. 30th of June 2025. So, and basically for us to prepare this, we will be guided by our group structure, because remember we have the parent, we have the subsidiary. How do we prepare this? We prepare this by combining similar items of revenue and expenses, those of the parent, those of the subsidiary. But basically we have said this subsidiary, taking into account it was acquired 9 months to the end of the year, we will take its revenue and expenses only for 9 months. We apportion the revenue and expenses of Swara on time basis. And basically, we will also make the necessary consolidation adjustment. So let's do that. So we go back to the statement of profit or loss for individual companies. We have below paragraph 1. That is now what we use in preparation of this. Because we use all those values which are there, we just combine them. So we have the sales revenue. We can just refer to that as revenue or just the sales revenue. We will take the full amount of the parent. For the parent, we don't apportion that on time basis. But now for the Swara, that is a Swara, which is a subsidiary, we will take 6,000 times 9 all over 12. Times 9 all over 12. It was acquired 9 months to the end of the year. Are we together? Yes. Don't take the revenue for the whole year. And then to this, whatever you get, we have now to less any sales between the parent and the subsidiary, any amount of intragroup trading. I hope you can be able to remember this working 3. We have the amount of intragroup trading, 3,000. So we rest it here. Do we have any other adjustments? No. No any other adjustment. We need to get the final value. We need to get the final value. This basically will give us 45, 19.5, 19.5, which will give us what? Which will give us 16,500. Yes, that is basically the revenue. So then we proceed and we compute the cost of sales. Cost of sales, we do the same. We take that of the parent, which is basically 10,500, plus that of Swara, which is basically 5,000. Group trading. This intra-group trading, this one should be deducted from the revenue and also the cost of our sales. Any other adjustment to be made to the cost of sales? Yes. Remember this depreciation other charge of 150 we said should be added to the group cost of sales. We add 150. The depreciation other charge, this one. And then we also have this unrealized profit of 125, we said that one should also be added to the group cost of sales. So we also add 125. Do we have any other adjustments? No. We get the final value and we less it from our revenue. So, and I'm getting 11,525. Yes, what are you getting? So I'm given by rows a different value. Someone to confirm. Yes, I think I'm getting also the same figure with Anna. 11,525. Yes, confirm rows. I think your figure is wrong. Confirm your figure rows. So we get less that from the revenue, which is 16,500. And basically we get gross profit of 49,75. What is this? This is basically the gross profit. This is the gross profit. So having that, then we need to go back to the statement of profit or loss. And basically below that, we have operating expenses. Operating expenses. The operating expenses will take those of the parent, which is basically 15. Then we take those of Swara, which is 15. But remember, for Swara, we are not taking for the whole year. We multiply that with 9 all over 12. We're only taking expenses for 9 months. For 9 months. And then do we have any adjustment to be made to this? Yes. This impairment loss as per note number 4, should be added to the cost of sales. Note number 4, the impairment loss suffered by the goodwill 75 should be added here. Should be added there. Should be added there. Martin, everything we are adjusting to the cost of sales is here. The parent subsidiary for 9 months. We less intra-group trading. This one, yenye tumeandika hapo. 150 is depreciation other charge. We add it. 125 is unengaged profit. We do what? We add it. So we have a number of adjustments to the cost of sales. That's that? Yes. So the operating expenses, I don't think we have anything else. So let's get to the final value. So, and what do we get here? We get 1612. 1612.5. 1612.5. That is what basically I'm getting. And then below that, we have the loan interest received and the loan interest paid. Now, what I want us to do, there we have 2 items. If you take on to the parent company, that figure of 1875 is an income, is the loan interest received. To the subsidiary, it is an expense. Now, there is an adjustment in relation to that, but we have to go back to the information we have in paragraph 1. Can we go to the information in paragraph 1? The information we have in paragraph 1, we are told that this company here acquired 80% of the shares in Swara. And then also in sentence number 2, we are told that on the same date, the parent company, which is basically 𝐎𝐻𝐿 Limited, also acquired in Swara some loan stock. So the loan stock which were acquired by the parent in Swara, we are told they were 50% of the 10% loan notes which are issued by Swara. Can you tell me the loan notes, the 10% loan notes issued by Swara, they have a value of what? Loan notes we know are part of the non-current liabilities. We go to the balance sheet of Swara. You tell me the loan notes issued by Swara. The loan notes issued by Swara, they have a value of 500. So basically, TUI Limited acquired half of this. Acquired half of this. So half of this, that is 50%. It's basically acquired. The loan notes acquired had a value of 250. It basically means that when this company paid interest, this Swara, some of the interest was paid to TUI. TUI Limited accounted for that as interest received. But basically what we said is that that is an investment income which is received within the group. Let's first of all, we compute that interest which TUI Limited, the interest TUI Limited received from Swara. It will be equal to, remember these are 10% loan notes. So meaning that this company received interest of 10% of 250 loan notes acquired. And then did our company receive the loan notes for the whole year? Automatically, no. So TUI Limited received interest for just 9 months from the date the loan notes were acquired. Remember, the loan notes were acquired on the same date with the shares. Sasa? Yes. So therefore, this company received interest equal to 10% of this, and also for 9 months. And also for 9 what? Months, not for the whole year. It received interest for 9 months. So this will give us what? 25 times 9 divided by 12. So this will give us 18.75. So this is basically the interest we receive from who? Swara. And actually, if you check on the income statement of TUI, that is the amount TUI accounted for as interest received. Are we supposed to include that here? Automatically, no. Because this is what in our previous class we refer to as intra-group investment income. Intra-group investment what? Income. Any investment income received within the group, are we supposed to include it here? No. So that one will not be included here. So what we will include here is basically the interest expense, which was paid, the interest expense which was paid by Swara. You can see Swara paid interest of 50. Paid interest of what? Of 50. But basically, are we supposed to take interest for the whole year? Are we supposed to take the interest for the whole year? No. So we will take first of all interest for 9 months. 9 months. So that will give us what? Interest of 9 months. It will give us 37.5. Are we together? But we also have to remember that part of this interest which was paid by Swara, part of it was paid to which company? Out of the interest which was paid by Swara, part of it was paid to who? To the parent, was paid to the parent. Are we supposed to include that here? No. So what we also need to less here is this interest which was paid to, the interest paid to TUI. So which is 18.75. So that one should not be included here. Any interest paid within the group, any interest generated within the group, we don't include it here. So we less 18.75. And basically that will give us what? That will give us 18.75. 18.7 what? 5. And I think that's basically what we have. We should get now the profit before tax. We should get the profit before tax. The profit before tax. So the profit before tax is basically this minus that. So what are you getting? I'm getting that 43.75. Yes. So then to this, we left tax. We left the income tax expense. And usually income tax expense is a free mark. Usually tax do not have any adjustments. Do not have any adjustment. We just take that of the parent, 750, and that of the subsidiary, which is 150, But this 150 automatically we take this for 9 months. No adjustment for this. And then we will have the profit for the year. The profit for the year. That will give us what? You're getting what? 862.5. 862.5. And basically we less it from that value. That is 3343.75. Yes, so this will give us 2481.2 what? 0.25. 0.2 what? 0.25. So basically in our case we are done. And basically that's what was required as far as that question is concerned. So these are the items which are marked 1, 2, 3, 4, 5. And usually this is how the marks are allocated. Take into account you have 5 items and marks are allocated at 8. You will be given any 4 at 2. You just need to get 4 items correct and you get all the 8 marks. Sasa? Yes. So then what we need to do, can we proceed? Can we proceed and prepare the consolidated statement of financial position? That is part Roman 2 of the question. The consolidated statement of financial position. Consolidated statement of financial position as at 30th of June 2025. Now, how do we prepare this one? This one is basically prepared by combining similar items of assets and liabilities, those of the parent, those of the subsidiary. Now, this one is as stated in the date. This one is prepared as at the end of the year. So basically what that means is that even if this subsidiary was acquired 9 months to the end of the year, items of assets and liabilities of the subsidiary, this one should not be apportioned on time basis. We don't apportion the items of assets and liabilities on time basis. Number 2, when taking into account the assets and liabilities of this subsidiary, we take the full amount. Despite the parent company having acquired 80% of the shares, take the full amount. There are those students who make a very big mistake. When taking the assets and liabilities of SWADA, they take 80%. Take the full amount of assets and liabilities of the subsidiary. Number 2, never apportion items of assets and liabilities on time basis, like what you have done to the items of what? The revenue and expenses. Yes. So let's prepare that here. And basically, we need to start with the non-current assets. Non-current assets. So for the non-current asset, basically we have property, plant, and equipment. So we will take those of TUI, 4830, plus those of SWARA, which is basically 2000. And then we check, do we have any consolidation adjustment? Yes. So we have revaluation of asset list adjustment here, where this company revalued the asset. We say this gain, we add it to the PPE, and then we have this depreciation under charge of 150, we less it. So 2 adjustments, we add the revaluation gain of 800, this one, and then we less depreciation under charge, this one of 150. Or 150. Any other adjustments? No, any other adjustment. No, any other adjustment. We can get the final value. Plus minus 150. 74 what? 7480. Then below an non-current asset, we have investment. Investment. Now, in this case, for investment, we should take those of the parent, 2820, plus those of the subsidiary, which is basically 0. But now, this investment by the parent company, this is basically the purchase consideration which was paid in acquiring shares and the loan notes of the subsidiary. I hope you can be able to remember when the parent company acquired 80% of the shares in Swara, this is the amount which was paid. This amount is included here. The examiner will not tell you that. Is included here. When the parent company acquired roll notes, the roll notes which were acquired here, and I hope you can remember those roll notes had a value of 250. We have computed that. That amount which was paid is also included here. Are we supposed to include it here? Are we supposed to include that purchase consideration which was paid? No. So to this, therefore, we less this amount which was paid in acquiring shares, 2750. We also less the amount which was paid in acquiring the debentures, because that is still an investment within the group. It's an investment within what? The group. And actually, if you less those two values, that should give you 0. That should give you what? 0. Are you getting 0 there? That should give you what? 0. That should give you 0. Are you getting 0, Anna? David, Martin, are you getting 0? Yes. Now, instead, in relation to this purchase consideration, which was paid in acquiring shares, what we recognize here is the goodwill. This goodwill on acquisition of Swara, which we have computed here, this one after deducting impairment loss, 282.5. Nothing else we recognize there. Then from there, we basically proceed and record what? The current asset. Now for the current assets, I think in fact we're given the total. Okay, we don't have to underline this. So we take those of the parent, that is 750, plus those of the subsidiary, 2000. But what we need to record here is what is included within current asset. Current asset comprises of inventory, comprises of receivables, and so on. And I hope you can remember there are some adjustment to be made to the receivables, to the inventory. Like this amount of intercompany debt, this one should be deducted from the receivables. Receivables is part of this. So to this we less that amount of intercompany debt, 187.5. We also have this amount of unreleased profit, this one, which we said we less from the group inventory, which is 120.5. To this we also less 125. Any other adjustment? No. No any other adjustment. We get the final value here. That is 750 plus 2000 minus 187.5 minus 125. And basically that will give us 54, that is 7.5. And basically we get what? We get the total assets. The total assets. So we add all this. And basically I'm getting that in to what? That in 200. That into what? That in 200. Yes. So then from there now we proceed and basically record equity. Equity we start with what? Equity we start with the ordinary share capital, or basically share capital. And I hope you can remember in our previous class we said for share capital, we only include that of the parent company only. That of the parent company only. Reason being that of the subsidiary, we used that in the computation of goodwill. Actually, anything which you have used in computation of goodwill should not be included here. That's why you have said, like this purchase consideration, which is part of this, we don't include it here. Anything used in the computation of goodwill, don't include it here. Yes. Below that, what we have? Retained earnings. Now, retained earnings, this is basically one of the items, which is a little bit complex in terms of its computation. I'll be able to show you how to compute that, but generally in an examination setup, this is an item we advise the student not to compute. You'll be able to see its computation is a little bit technical. But basically, in this question, we will compute it, but moving forward, we're not going to compute that in any other question, because If you can compute this and you get it correct, it basically means that all these figures are also correct. And we have said for this question, you don't have to get everything correct for you to get all the marks. You'll be able to see the computation of that. So we will get the total equity. There is also something else we compute and we include it here. I will also be able to explain what is that. And controlling interest. That is also something also in an examination setup. I'll not advise you to compute. I'll not advise you to do what? To compute, but we will compute this only in this question. But moving forward now, we will not compute that in the other question, because even in an examination, I will not advise you to compute that. That's yes. Now, we will come back and compute those two items, but can we record the other obvious items? So non-current liabilities here, we have 10% loan notes. Now, the 10% loan notes, we take those of the parents. Remember, these are items of liabilities. We add those of the parents, those of the subsidiary. So the loan notes of the parent, 0. Those of the subsidiary, 500. But also recall, these loan notes issued by the subsidiary, half of them are held by the parent. Are we supposed to include that here? No. So we less the loan notes issued to the parent. So we are left with the loan notes issued to the outsiders. So then finally, we have the current liabilities. Current liabilities. Current liabilities, this one, we take 25 plus 900. But equally, you have to recall, current liabilities include payables. And there is an adjustment to be made to the payables, this one, of 187.25. 187.5. And basically, this one should be deducted, not added. Yes, what do we get there? That should be 34 minus 187.5. That will give us what? What are you getting? 3212. 3212, confirm that because I want us to finalize. Are you getting that? Yes. So, and automatically the total equity and liabilities, we should get the same value we have up there. But remember, there are two items we need to compute here, this one and this one. So what I want us to do, can we quickly compute those two items? Those two items which are remaining. I will start with the group retained earnings. I will start with the group retained earnings. So the retained earnings, basically, which we include here, we refer to that as the group retained earnings. Group retained earnings. Group retained earnings. How do we compute this one? We take 100% of the parent company retained earnings, and then to this we take 80%. 80%, I'm using this percentage of subsidiary company post-acquisition retained earnings. Post-acquisition retained earnings. We don't include pre, because pre-acquisition retained earnings, we use that in the computation of goodwill. Yes, so what we need to do is basically to have two columns for our two companies, TUI and basically Swara. TUI and who? And Swara. TUI and Swara. And basically in this case, what we need to start with here is the retained earnings, which are given in the statement of financial position. Can we go to the statement of financial position of these two companies, specifically at the equity? We take those retained earnings. At the equity, the retained earnings of TUI is basically 64. For Swara is 21. But now, remember what you're saying here. For Swara, we only consider post-acquisition. So this one, 21, include the pre and post-acquisition retained earnings. So therefore, as far as the subsidiary is concerned, to this, first of all, we list the pre-acquisition retained earnings. The pre-acquisition retained earnings is that retained earnings which you have used in the computation of goodwill. Can you tell me the retained earnings which you have used in the computation of goodwill is how much? We have taken 13 something plus profit for 3 months. The retained earnings we have used in the computation of goodwill on acquisition of Swara, how much is that? We try to arrive because of time. Mahali to compute goodwill. That retained earnings which we have there is 15 what? 1537.5. Is that what you have? Mahali tumecompute goodwill on acquisition of Swara, kuna ile retained earnings tumetumia hapo. That is now what we refer as the pre-acquisition. Now, after deducting this, what are we left with? We are left with post-acquisition. We are left with post-acquisition retained earnings. That only applies to the subsidiary, does not apply to the parent. So that will give us a 562.5. This one will be 64. This one will be 64. But now, before we proceed to take 100% of this and 80% of this, kuna some adjustments. Ukiangalia zile working tumefanya hapa, kuna number of items we have said they should be deducted from the retained earnings. I will start with this one, depreciation under charge. We say this one should be deducted from the retained earnings of which company? This one. The company which under charge depreciation is Swara. We have depreciation under charge to be deducted from the retained earnings of who? Of Swara. This one. Deducted from the retained earnings of Swara. This one will not adjust affect the retained earnings. We also have this, and it is profit by who? By Chui. So this one will be deducted from the retained earnings of Chui. 125. Like that. Anything else to be deducted here? Yes. There is something else we should also remember to capture here, and that is basically the impairment loss. So once the parent company acquired the subsidiary and the goodwill is impaired, so that is an expense to the parent because the goodwill is an asset to the parent. So in note number 4, the goodwill had suffered impairment loss of 75. That is an expense to the parent. Was it accounted for? No. Deduct that from the retained earnings of who? Of the parent. Anything else we consider here? I don't think so. So then we get the net amount, and now we apply our percentages. This one will be 200. This one will be 62. And this one will be 412.5. Yes, and then now what we do is that we get the group share. The group share, we apply these percentages, 100%, and basically 80%. 100% is 62. 80% of that is 330. 330. And we add the two values, that will give us the group retained earnings. The group retained earnings is 65, 30. 65 what? That 65, 30. Is that what you're getting? $65.30. 65.30. Yes. So that basically how we compute that. I hope you can see the computation of that is a little bit complex. That's why, for example, we don't advise students in an examination to compute that. And I think we can get the total equity here. 0.9. So what is remaining is this non-controlling interest at year end. Now, when we talk about the non-controlling interest, basically, what is this? This is basically the capital, the amount invested in subsidiary company by NCI. Sasa, in very simple terms, this is the capital which is invested by the minority shareholders. You see, in this subsidiary, we have two shareholders, tuko na parent who hold 80%, and then we have minority shareholders who hold the remaining 20%. So if you check on what we're including here in this balance sheet, we're including assets of the parent and the asset of the subsidiary. So the asset of the subsidiary, all of them are not owned by the parent. So
anyone got an idea? You want to proceed? Or I just select a paper? Okay, since we are not sure, nobody is sure, I'll select a paper, then we can be able to look at it. So I can see somebody has written something. So somebody has written something. Okay, so random paper, but I don't want a paper that we have discussed before. So random paper means I have to come down here. The ones that I'm sure we have not been able to cover must be papers which are now down here. So let me select a random paper down here. Good, this one here. April 2024. This one you're done. Group decision making, this one you're done. This one you're done. So can you see that one you're done? This one. Marketing research, this one you're done. Company text marketing research, that one you're done. Let me look at that question here. Business incubation, access quality, this one you're done. Incubation, you're done. This one now. I think this one now. Yes, this one I think we are not done. So let's look at this question, number 6, so that we don't take much time. We can proceed as a group. Now, this question is asking, the question asks, outline 5 types of decisions made in a company. So if you have an organization, which are some of the types of decisions that are likely made in a company? So I want to look at some of the types of decisions that are likely to be made. Number 1 is called strategic decisions. So these are long-term decisions made by top management. They define the direction of the organization, such as what? Entering new markets or launching a new product. So when we talk about strategic decisions, these are normally made by the strategic level management, which is basically the top level management, and their work is to ensure that what? These are basically, for example, we talk about issues like entering a new market. That is the decision that has been made by top management. They sit down and say that now you want to expand. So you want to expand to which markets? You want to expand to Ugandan market. So basically, that is one of the decisions. Then number 2 is what? It's called tactical decisions. The second one is called tactical decisions. Which are these decisions? Now these are made by middle level management. You see, strategic decisions are normally made by top level management. Now, these tactical decisions are made by middle level managers, means in between. These decisions focus on how to implement strategic plans effectively. For example, developing marketing campaigns or recruitment plans. So basically, those are called tactical. They are normally mid-level management decisions. So once the top level has made strategic decisions, now implementing them is normally what? Done at that level. The number 5, we have what's called operational decisions. Operational basically means what? These are day-to-day decisions. These are normally decisions that happens on day-to-day. Operations, you come. Those are, we call them what? Daily decisions, or decisions that are made on daily basis. So that These are day-to-day decisions made by lower level managers, managers or supervisors to ensure routine tasks are completed efficiently, such as scheduling staff or managing inventory. So basically, operational decisions are made by what? The junior level or the lower level managers, and they are normally what's called day-to-day operations. We have given an example there. Now, the first thing we talk about, strategic number decisions are normally made by top level management, tactical mid level management, and then what? And then operational, basically, the lower level management. Then the next one is called program decisions. They say the way the name suggests what's called program, means they're repetitive. When we talk about this is how this system is programmed, means it can do a repetitive task day tomorrow without any problem. So these are repetitive and routine decisions made by following established guidelines or rules. For example, reordering stock when it reaches a reorder level. So things like when you want to order, do procurement, there's normally what? A program. There's normally a procedure to follow. So you repeat the same. If you're buying laptop for the company this time, you follow the same procedure. If you want to buy a car for the company, the same procedure applies. So basically, call them what? We call them program. Because what? You every time you follow the decision or the procedure again and again and again, depending on what you're doing. Then you have what's called non-program decisions. This could be a one-off decisions that you make in a company. So that this involve unique or unstructured problems that require custom solution. For instance, handling a crisis or responding to what? Unexpected competition. So these are things that can come. For example, talk about responding to an unexpected competition or handling a crisis. Nobody is prepared to. A crisis comes sometimes when you least expect it. So when you want to manage that crisis, you may make decisions. That's what we call them what? We call them non-program. Means there are things that you didn't expect, but now since they occur, you have to what? You have to find a way of what? Of handling or managing those decisions. Very, very important. That's what you look at that. Look at it very carefully. Now that is on number 1A, question 1A. Question 1B, somebody has a point here. Let me see. Let me see what is being handled here. Consensus, participative, type of decision basically. Consensus, those are basically decision-making techniques. Wendy, consensus are called, these are called what? Decision-making strategies or techniques. I don't know if you're getting me, Wendy. They are not types of decisions, but basically, consensus is a decision-making technique, participative also. Basically, those are techniques, but the question was asked about what? Asking about types of decisions. So that's a very good trial. At least you've been able to get a clarity on that. So that's okay. Now, the next question here is asking, Joseph Muller, the marketing manager of XYZ company, intends to collect marketing information to enable the company make marketing decisions. Identify factors of such information. So you want to collect information about marketing. So the question asks, where can you be able to what? Or which areas can you be able to collect such information? Or where do you get this marketing information? Where can you get them? Number one is what? You can get them from what's called internal company records. You can look at the records of the company and get records about sales for the last 5 years, sales record, projection, and all those things. So sales data, you can look at the sales data, how sales has been happening, customer feedback on sales, financial reports, and CRM. CRM means customer relationship management systems, provide useful insights into customer preference and business power. So basically, you can be able to look at the records of the company, which include sales data, customer feedback, financial report. All this one can help you make a very informed decisions. Number 2 is what? Marketing research. You can also do research. When you do marketing research, you are likely to come up with what? Or you're likely to come up with a very good marketing information that may not be available. So we say that involves systematic collection and analysis of data from surveys, focus groups, and interviews to understand market trends and consumer behavior. So you can also decide that, okay, I don't have information. What do? Let me do a research, and then from the research, I'm able to what? Get my findings. And my findings can be a source of very good information. So that is also an area you have to look at. Market, you can do a research, and from the research, you can get what? Some very vital information. The next question is on competitor analysis. The next source is competitor analysis. You can be able to what? You can try to analyze the competitor, and that one can also help you. So what do you mean? So information on competitors' pricing, you can look at how much are they pricing product in the competitor pricing. Promotion, how they do promotion? Do they do online marketing promotion? I will check on that. And product offerings, what are they offering in the market? What's their pricing? Help in benchmarking and strategy for me. So basically, you can also collect what? You can also collect competitor. You can look at a competitor now and collect very important information. Number 4 is what? Government and industry records. So basically, platform reports. Basically, there are a lot of reports that are very important, especially in the Kenya, we call them what? In the Kenya Chambers of Commerce, you can get a lot of information, or from the what? From the National Bureau of Statistics, basically. You can get more information about marketing, about products, about production, about industry. So basically, you can also get what? Some information for research from those kind of institutions. And then number 5 is online and social media platforms. Basically, you can be able to get, you can even do a survey on social media, and people are going to respond. So basically, you're able to get information. So those are some of the 5 sources of information that you can be able to use in marketing, or you can be able to get and then what? Apply in marketing. I don't know if that question is clear. I believe it's clear. So we can move to the next one. Next question is asking, analyze 5 methods that could be applied in innovations to enhance employee creativity. This is another question that has been repeating itself a lot of time. So analyze 5 methods that could be applied in innovation to enhance employee creativity. What can we do to improve employee creativity as in a company? What are some of the measures you can do to ensure that the employees you have are very creative? They're very creative. Now, number 1 is what? Encourage open communication. That's very important. If you want to be in a creative environment, then encourage people to what? Communicate. Let them tell us what the ideas they have. Let us tell them why they think the ideas good. So basically, communication. So creating an environment where employees freely share ideas without fear or presume promotes innovation and original thinking. That is very important. Very, very important. So basically, encourage a lot of communication. So if people communicate, then basically it becomes easy for us to be able to what? Be able to be creative, because any idea, if somebody has an idea, then basically they can be able to what? They can be able to share that idea, and that can really help. Number 2 is what? Providing training and development. You can also train people on areas of what? You can also train people on how to be creative, areas of creativity. So you can also what? Take people training. You know, a well-trained employee is able to be creative. So that equipping employees with skills in critical thinking, so that they think more than the ordinary person. Critical thinking, problem solving. They can also be creative. If there's a problem, then they can come with what? A creative way of solving the problem, creative techniques, techniques through workshops, fosters innovation. So you can do a workshop, and that can really help them. Number 3 is what? Establishing a reward system. This is also very good. You should ensure that what? Those who are creative, or those who bring in new ideas, if their ideas work, then basically they are rewarded by the company. So that one encourages creativity. So that last year, so and so came up with an invention. The invention has helped the company. Was paid 10 million shillings for that invention. So basically, everybody else wants to be able to be innovative or creative. That's what they're able to work. They're able to earn from. So you encourage that by what? By compensating those who come up with what? With the new idea. Or those are the most creative employees are normally are compensated. That one makes it better. Number 4 is creating cross-functional team. Anytime you hear us talk about a cross-functional team, means it's a team made up of individuals from all other departments. We have somebody is from marketing department, we have somebody from accounting department, we have somebody from procurement department, somebody from HR. So basically, all the team that you have has experts from all over the departments or experts from all other departments. So basically, that one makes it easier because when when an issue of accounting comes in, there's an accountant there to help us understand. If an issue of marketing comes in, there's a marketer there. So basically, with those kind of information, you are able to ensure that what you're able to ensure that you encourage creativity, because what if you want to do, if you want to think about HR, then basically I can consult the HR in the team, and basically he or she is able to, or she'll be able to give me some insight, and that one can help in being creative. That's very, very, very important. Then number 5 is what? Allowing autonomy and flexibility. What is autonomy? We talk about autonomy is what? Allow employees to feel like what? To feel, allow employees to be a little bit, or allow employees to be independent. Let them do their work without any. Employees like being, when you give somebody autonomy, then basically they're able to work. They're able to ensure that works. They're able to be creative. If you give me work to do, don't follow me up so much. Allow me to use my skill to solve that problem. That's called autonomy. So giving employees freedom on how to approach tasks and solve problems can lead to what? Unique and effective solutions. So don't always tell them that, give them a problem, but let them use their own skills, their own intelligence to solve the problem. Don't wait until now, or don't give them a problem and then you want them to solve the problem. Ensure that what you try as much as possible to allow them to use their own skill to solve. They become creative in solving that problem. What's the problem? Wendy, you have written something called in control. What does that mean? What do you mean in control? I don't understand what you're asking, Wendy, so I'm just asking for clarification. You're written in control. What does that mean? Oh, yeah. So, I understand now. Basically, autonomy means what? You're given freedom to what? To control what you're doing. That's okay. Thank you, Wendy. Now, question 2 is asking, Nyatech is asking, can point 5 be named as business culture? Let me look at that point 5 and then we see if you can look at them. Allowing autonomy and flexibility. So basically, autonomy. Yes, autonomy is a business culture. There are some companies whereby what? They give employees freedom to solve the issue. They're given a problem and they're given. That's their culture means once I give you a problem to solve, I don't follow you up. That's a culture. But the place whereby you're given a problem and you're given a structured way of solving it. There's no autonomy there. It means what? I'm giving you a problem, but I give you how you're supposed to solve it. So autonomy or not having an autonomy in a company is a culture. There are some companies with autonomous cultures, others don't have the autonomous culture. So that's a culture. It's an culture aspect. It's an aspect of culture in the company. I don't know if you answered. I don't know if you answered, Nyatech. Are you well answered? Let me know if you answered so that I can proceed. Okay. Nyatech is answered. Nyatech is well answered. So we can proceed. We can proceed to the next. Now, question 2 is asking, question 2A asks, outline 4 internal factors that affect planning within a company. So which are some of the factors that affect planning? But these factors this question is very specific. These factors must be internal factors, means there are factors within the organization. So which factors within the organization can affect how planning or can affect planning affect planning as a function of management? Number one is organizational resources. So your plan must be subject to the resource you have, both human resource, financial resource, and capital resource. If you don't have enough money, don't go for a plan that requires a lot of money and you don't have it. So see that one. The availability of financial, human, and physical resources directly influence the feasibility of plan. That's very true. So basically, planning your plan depends on what? On how much money, even at your level. If you're planning on how to spend your money, you look at how much money you have time. So you look at the money first, you know, this is what I have, then from that one you plan. You don't plan, then look for the money. You look for how much you have, then you plan with that, basically. Now, what is the company culture? Basically, your plan must be within the culture. So the company culture is also a very important factor that, or is also a very important factor that basically affects planning. Now, what does that mean? So we say that the values and beliefs within our organization can either support or hinder strategic planning. So the culture that you have, you can have a culture that supports planning, or you can have a culture that does not support planning so much. So basically, the culture of the company determines how planning is, or determines what, how you undertake planning, or how planning is undertaken. That's very, very true, very important factor. Then there is what? Management style. That's a very important factor. How you manage. Are you autocratic? Are you democratic? Do you use leadership? So basically, the management practice or the management technique will definitely affect the planning. So that authoritative versus participative management style affects how plans are developed and implemented. So if you are an authoritative manager, then what happens is that what? You decide on the plans yourself and then tell employees to follow the plan. If you are participative manager, then basically you call people and then you agree as a group on how to come up with a plan and how to implement it. So that is basically what happens. Very, very important. The next question here is organization. The next point is what? Organization structure. Basically, structure you have will affect how you plan. So we say that the way roles and responsibilities are distributed can facilitate or complicate the planning process. So the culture you have, the structure you have, the structure can either support a plan or frustrate or inhibit implementation of plan. So the company culture or structure also plays a vital role in what? In the planning process that is done. The next question here is asking, somebody has written something. Let me try to get what has been written here. Skills and knowledge of the employees, very true. If you have very skilled and knowledgeable employees, then basically they are going to help you implement the plan very easily. If you have employees who are not skilled and not knowledgeable, then basically implementing or planning function can be difficult in that company. So that's another one. I agree with that. That's very true. That's very true. From that point. This, what time? From what time? You're supposed to go for prayer break at what time? We normally go at 7. Now today, what you want us to go at what time? Or it varies? Or 57, there's no problem. Today it's coming early, so there's no problem. We'll leave at 50. Now the next question here is asking. The next question is asking 6:57. Huh? Okay, no problem. Now the next question is asking, summarize 6 types of organizational change in the 21st century. So what are some of the changes that you see right now, currently? 21st century is currently where we are. What are some of the types of the number one call is technological change. You see that technologies keep on what changing. It keep on advancing. So basically, technological change is one of the change. So talk about adoption of new technologies like AI. AI is taking over automation and digital platforms. So basically, in this century, then basically we have what technological change. Number two is called structural change. The structures changing. So modification of hierarchy, roles, and reporting is basically structure. We talk about the structure change means what? The company structure keeps on changing in terms of what? In terms of hierarchy. We look at the hierarchy and if it's suitable, we implement. If it's not suitable, we change something. Talk about roles. Even roles of managers are changing, are drifting. Roles of managers, roles of employees. Even accountant. The roles of accountants in 1980s or the 1970s not the same as some. There's some roles which have been added additionally to what? Accounting profession. And then reporting. Who do you report to? Number three is what? Strategic change. You must, this is very important. You must change your strategies to ensure that what? You're able to what? You're able to survive. So a shift in direction, vision, or goals in response to what? Market demand. So basically, your strategies must change in terms of your vision must change, your mission must change, and even your objectives must change. So basically, that's right, change. The number four is called cultural change. Companies are changing cultures. So transformation of values, norms, and work ethics. So the values of the companies are changing. Values are expressed here. So basically, if you look at the values of company in the 1960s and now, they're really different. Norms are changing, and also what? Work ethics. So ethics, companies are nowadays embracing ethics. So you find that what? They're employing a lot of what? A lot of ethical principles of ethics. Then process change. So designing workflow or procedures to enhance productivity and quality. This is very true. The process change means what? There's a process of, like for example, even the process of applying for an ID in Kenya. There's a way it used to be done. Process of applying for passport. If you look at the way it used to be done in 1960s, 70, and now it's different. So that means what? Because of the technology, this what? Of course, nowadays used to use what? E-citizen. Traditionally, maybe there was no digital way of doing it. And then you have what's called what? The people-centric change. These are basically change that happens in people and also affect the company. So talk about change in employee roles. The roles are changing. Skills development are changing. New employees are acquiring more skills. Or leadership approach to adapt to modern work. So basically, you need to change your skills. You need to build your skills. You need to ensure that you have a good leadership style, and also you need to ensure that what you have a good approach that's able to help you manage a modern employee. This Gen Z and the new people is very important that you look at that. So our brother had requested for a prayer break at this time. So I'm requesting the rest. You can take a glass of water. Then we meet here at exactly 7. We are taking a 10 minutes break, and by 7 we should be back here. Thank you very much. Let's have a small break. Then we come back to continue this question. We are back. Please confirm if you're back. Confirm. If you're back, confirm so we can proceed. Good, I can see people responding. That means we can see a good response. Buchi Aziz Orangi, back. So I believe everybody else is back. So the next question here is asking, analyze 5 challenges associated with delegation. Delegation basically means giving some activities to be carried out by a junior. When you are giving your junior some work that is supposed to do on your behalf, that is called delegation. So this question is asking us challenges of delegation, or sometimes reasons why Some people would not want to delegate, call them challenges, or why would somebody say that, delegation has got the following problems. So what are some of the challenges you are likely to face in delegation? Number one is lack of trust. Sometimes we don't delegate duties to our junior because what? We don't trust them that they're able to what? Do the work the way it's required. So if you don't have 100% trust that your junior can do the work, then basically delegation becomes very, very difficult because you're doubting them. So managers may say to delegate tasks to their due to fear of what? Subordinates may not perform adequately. When you fear that the junior member of staff may not be able to do the work well, then basically it is a need for it's a case for what? For fear. So number one is lack of trust. Number two is what? Inadequate training. So that employees may lack necessary skills or knowledge due to what? Poor performance of the research. So basically, when you talk about training, maybe the junior employees are not well trained on how to carry out the delegated tasks. So they may end up doing the work in a very shoddy manner. That's why we say that you can delegate activities or duties, but you can never delegate responsibility. That's why if you believe that your juniors are not competent enough, then basically it's better you don't delegate, because if something goes wrong, you will be blamed, not the junior member of staff. Then number three is fear of loss of control. This is also a very important, very major challenge. Sometimes, if I'm the senior person, I fear that if I delegate, I'm giving a hypothetical example. If maybe 𝐻𝐿 is my junior and I'm the senior, now there's a fear that if I delegate duty to 𝐻𝐿 may outperform me. When 𝐻𝐿 outperforms me, the management or the senior people may believe that what? I was not doing enough. So sometimes you may delegate work to some junior and then he outperforms you, and then it looks like what? You're not doing the work well. So that some managers feel they will lose authority or become less relevant if they delegate important tasks. Sometimes some managers feel like what? Because they do those important tasks, they're very important. So if they delegate, then basically the importance for the company goes down. That is one thing that they also feel. Number four is unclear communication. So without clear defined expectations and instructions, delegated tasks may be misunderstood or executed incorrectly. So there's something called information. Anytime you are delegating tasks, giving somebody a task, or you're delegating tasks, you must first explain to the party what you expect them to do. You must let them know the do's and the don'ts, so that they don't what? They don't start guessing. You must know in that word, this is what they're supposed to do in this work, and this one don't do. So basically, sometimes we delegate tasks and then we don't tell the employees what, or we don't tell the junior staff what to do. So they start guessing what they think they should be done. So basically, in delegation, ensure that you tell them the expectation that I'm giving you this work, do A, B, C, D, and report back to me. So that's very important to look at that. And then number five is accountability issues. That even when tasks are delegated, the managers remains accountable for results, leading to what? Reluctance to delegate critical assignments. So we talked about responsibility or accountability. Means as a manager, even if you delegate a task to somebody, let's say for example, 𝐻𝐿 is my manager. If 𝐻𝐿 delegates duty to me, and then I do them wrongly, 𝐻𝐿 will still bear maximum responsibility, and he is accountable for the wrong deeds that I've done. You delegate tasks, but not responsibility or what? Accountability will be here. So for me to, because I can give work for my junior and then he does it badly, and then in case something goes wrong, even in court, I can be the one being held up, being taken to court, not my junior, because I was supposed to do the work. I am the one who delegated the duty to the junior, and I didn't confirm their competence first. I didn't determine their competence first. I just gave them, and then did it wrong. That's very important. That's why even in critical sectors like hospital, even if you are still being trained to be a nurse or a doctor, there's normally a supervisor, an experienced doctor or nurse that works with you. So that what? And they're normally told that this attachee is your responsibility. So ensure that whatever they do, you monitor. So those ones happen in critical areas, even in the aviation industry. Pilots, basically, before you can be allowed to fly alone, you are normally given an experienced pilot to be taking you until you gain enough flying hours before you can out, so that you can now do the work at least independently. So those ones. So talk about what accountability issues means. What the person who delegates the task is still accountable for the task, even if the junior does it wrongly. So that's another challenge in our delegation. So I hope that is understood, those challenges understood. Question number 3, A is asking, in relation to the statements, which statement was that? I think there's something that I left. There's something that I left here. In this question, I don't know if there's somebody with the past paper. So this question, I'll jump it. Somebody write somewhere, write this question, I'm jumping it because write the question on the page, because I know there's a statement, and from that statement, I'm supposed to answer this question. So since I left out the statement, it's going to be very difficult for us to know. But there's no problem. That the question just asks about, so you can still answer it basically. Talk about what? Explain some of the characteristics of a group. Also, this question basically asks about what? The features of a group. But if we get the papers, then you can say, what I'll share the papers. Not the one which is not, I'll share the normal papers. These ones are basically the revised papers, but we also have normal papers. I don't know if I send the link. Did I share the link with you? Did I share the link where you can get the papers? Did I share the link? Now you're back. So this question is asking about what? Features of a group. What are some of the characteristics that what a group has? Number one is common goal. So basically, if you work as a group, then basically you must have a common goal. If people have got different goals in a group, then basically that's not a group. A group must ensure that you have a common, like a team, a football team or a whichever team. You do different things, but all of you work towards what? Achieving a win. So that group are formed. Groups are formed with a shared purpose or objective that unites members and drives collaboration. So even a group or a team must be people that what have a common goal. There's a goal that they want to achieve what in commonly. Then the next one is interaction. Interaction is very important. That's because you are a group. Somebody has written something here. Which one? The question. Group formation. Group decision making. We are done it. Even group decision making. So basically, I'm not really, I don't know the specific topic, but I know we are done aspect of groups. If you check the notes, you should be able to see group. Very important that you understand the concept there very, very well. Now, the next one is the next question is asking group norms. There should be a norm. A norm is basically rules that govern the group. You see, anytime you have more than one person in a given situation, you must know that what? There must be some regulations. It happens. There must be some regulations. If you don't do that, then you'll end up what? You'll end up having everybody behaving the way they want. So for a group to move on well, there must be some regulation. There must be regulations put in place to ensure that what? The group functions. So anytime we talk about a group, there must be regulations to govern the group. So we talk about group norms. So informal rules and standards guides how members behave in the group. So basically, that is very true. You must ensure that what in a group there is a way in which people are supposed to behave. So it can be formally or informally. Anytime we talk about group, we talk about aspect of informal group. You and your friends, that is an informal group basically, whereby you interact. But even in that group where you're interacting, we don't write down rules that this is how we want to behave. But automatically in a group, you try to what? You try to behave a little bit better. So that what you don't go to an extent of what? Of making other members feel embarrassed, or you don't bring in harmony in the group. So that is very, very important. So we talk about what? Aspect of group norms. So talk about informal rules. Informal means what? They are not set down. If you're a group of your friends, you don't set rules, but basically there's a standard way of behavior that what should be able to have. So talk about rules and standards guide how members behave within what the group. Then five is what? Rules, roles, and status. So each group members may have a specific role or status that defines the responsibility and portion. This is very true. When we talk about aspect of what? Aspect of members. Sometimes the group we allocate duties and responsibilities. So you know that you're the group treasurer, you are the chairperson, you are the team leader, you are the sergeant at arms. So basically, sometimes we talk about what? The roles given to each group member, and also what? The responsibilities. Like you look at a group, I've got a team, basically, like in a team football team is an example, a good example of a group could be a team, a football team more than airport. I know there could be people here that are not into football, but I'm talking about just a team. A team, if you have a team has got what? Different people doing different things. You have the goalkeeper, we have the defenders, you have the midfielders, we have the attackers. All of them do different things, but at the end of the day, they want to ensure that what? At least they're all There's a role of a goalkeeper, role of a defender, role of a midfielder, role of a striker. So basically, they do different things, but at the end of the day, they must ensure that what they help the group achieve it what achieve its objective. Very, very important that you look at that perspective very well. The next question here is asking. The next question here asks, examine 3 assumptions of Maslow hierarchy of needs. This one we did. We call them theories of management or theories of motivation. You can call them theories of management or theories of motivation. So you're told about 3 assumptions. There's this guy called Abraham Maslow. Abraham Maslow said that what needs of the human beings are classified from the basic needs all the way to what? To self-actualization. So in doing this, in coming up with these needs, which are normally classified and ranked, there are some assumptions that he was able to say that, well, these are some of the assumptions that researchers found that he assumed, or him himself in coming up with that theory, he was able to say that these are some of the assumptions to this theory. Now, number one is, Maslow believed that needs are hierarchical, means lead follow one another. So, like for example, we said that the first needs are called physiological needs. That means what? Needs for clothing, shelter, and food. Then after that one, then go to what? Safety needs, security, both job security and physical security. Then social needs, then self-esteem needs, then actualization at the top. So basically, according to him, that what these needs are hierarchical, means what they are ranked, the first, second, third, until during the best, the highest need. But in real life, those needs may not be classified like that one. Sometimes you may need you may be in need of 2 needs at the same time. You need physiological need and what, and safety needs at the same time. So basically, they're not ranked in that case. So that human needs follow a specific order: lower physiological and higher level self-regulation, and lower needs must be satisfied. So according to him, he said that what needs must be satisfied what in that order, from the lower needs to the middle. But in real sense, that could not be. That's not the case. Sometimes needs can come even there. Some needs you can have needs which cut across the levels at the same time or in one time. Number 2, he said that what satisfied needs do not motivate. So according to Abraham Maslow, he said that once a need has been satisfied, then basically it doesn't become a motivation. It was like he's saying that if you're full, if you've eaten and you're full, then food does not become a motivation anymore. Ukishakula umeshiba, then basically food does not motivate you anymore. But the question is, do you get full forever? You get hungry and buy and get food at the end. So basically that one will apply. That's what he said, that once a need has been satisfied, then basically it doesn't become motivation. Now, for example, money. Even those who have excess money still need money. So the question is, if you have you are worth $10 million, you multiply with the Kenyan money, that's a lot of money. But you still look for money. The question is why? That is money that even if you sit down, you can still live very good life daily until you die without spending any money. But why do you look? So basically that one. And number 3 is what? Everyone has the same needs. So according to Abraham Maslow, that what? Everybody in this world, we have the same needs, which means not the same. People have got different needs, even motivation. That's very true. If you happen to read widely and look what is considered success in some countries, basically, now, he said that everyone has the same needs. Now, I was trying to give an example that in some countries, success is not determined by how much money you have. They look at the service you offer. So in some countries, however much money you have, when people talk about respect, what have you used for that to do? What have you done with that money? That is basically what concerns them, not like you have, but the most. They don't even recognize you. They may recognize somebody with lesser money and has been able to what? Do something to the side. But in the African setup, about money. The more money you have, the more power you have, the more recognized you are. Even in funerals, how much did you contribute? That is what matters. In schools, that's what matters. How much money do you have? In the family, how much money do you have? So that if a younger brother has more money than everybody, the respect is transferred from any other person to the younger brother. You even see some seniors stand up in the seat. Firstborn anaamka kwa kiti, mdogo akae kwa sababu mdogo kuna pesa, which is very unethical. But basically, in Africa, money is what we are worshiping. And we end up dying without what? Getting enough money. So there's something called self-satisfaction. This satisfy what you have, but work hard to be able to what? Get some that can take care of you and the people close to you and some people that you can help, basically. But amassing them and stacking them so that you want to become a billionaire without helping, you may end up dying without using the money. That's how nature is made that way. There's always balance of nature. When you take money from the poor and stack it somewhere, something is going to happen that's going to bring that back, that money. Either you have a sick person, take the hospital, going to kill you, eat your millions, and then money come back to the economy. So basically, so I was talking about that one. That's everybody has the same need. So if you look at some people work hard for the money as a need, some people work hard for some other things. So basically, there's no universal need for everybody. Although we need the basic needs are very important, but now other needs may not be the same. So that is those are the assumption of what of Maslow. Those are some of the things that he assumed in coming up with this theory. So these are some of we can call them what prisms of this theory. The next question is saying explain 3 information roles of manager according to Miss Berg managerial theory. So Miss Berg was able to classify management roles, I think, into 3 categories. So I think it's 3 or 5 category. And the first, the one category was what? Talk about information roles for manager. What are the 3 information roles for manager? Basically, number 1 is monitor role. A manager is supposed to what? Is supposed to collect, analyze information from both internal and also what? To stay updated on what? Environment. So basically, as a manager, you must collect both internal information in the company and external information and then analyze them to help you what? Make a proper decision for the company. Number 2 is what? Disseminate a role. So that information you are collecting from the environment, both internal and external, is not for only you. You're supposed to pass it. Dissemination is what? You're passing that information to other people. So you're supposed to, sometimes you go for these meetings, these top level meetings you discuss. The training or the idea you have come up with, you are supposed to disseminate. Let other people know what you've discussed. That can help the company. So that the manager shares relevant information with the team members to ensure everyone is informed and aligned with organizational goals. You're supposed to disseminate any relevant information that you think can help the team, then basically disseminate it, pass it to other people. And then number 3 is what? Spokesperson's role. As a manager also, you are the spokesperson of the company. If something goes wrong in a given company, you just where is the manager? Where is the CEO of this company? Mkubwa ni nani? That means what? Sometimes as a manager, when the company needs to pass some information, it will be upon you to pass that information. So that is called what? Informational role of a manager. As a manager, you are supposed to pass information to the people concerned or to your juniors. So those are the 3 information roles of manager according to Miss Berg management theory. So Masberg was able to categorize the roles. So he was able to group the roles. The group roles, very, very important. So he was able to group the roles. So he was able to get them and group them. That is basically what so he wanted to pass. Then the next question is asking question 4A. Say that states 5 principles of task specialization as proposed by Max Weber in his theory of bureaucracy. See, Max Weber is coming up again. So principles of what? Of task special. So Max Weber advocated that what? People should do what they're specialized in. That's called task specialization. You must do what you're specialized in. If you've done accounting, do accounting work. If you've done procurement, do procurement work. So Max Weber was advocating that what? People should be put in areas that they are conversant with and or areas that they have information or knowledge in. That is what Max Weber was advocating for. That is what Max Weber was advocating for. Max Weber. Now let's look at the theory. So what are some of the principles of this task reviewed by Max Weber? Number one is division of labor. Max Weber said that don't let somebody do work from the start to the end. Divide labor so that somebody does a part of the work, other person picks, so that the work is done in piecemeal. Accountant wafanye kazi yao ya accounting, accountant do their work in accounting. Procurement people let them do procurement work. Sales and marketing. So let's divide. So tasks are clearly defined and divided among individuals based on specialization area of specialization, promoting efficiency and expert. So if you're an accountant, then accounting, and you're doing accounting work, you're very efficient. But if I've done procurement and then I'm put in accounting work, then basically I start guessing and I end up messing up the company. Number two is what? Hierarchy of authority. So a structured chain of command exists where each position is supervised by a higher level, ensuring order and account. So you also said, I talked about what hierarchy, that there must be an order in terms of authority. Who is the senior most, followed by you until junior, and the aspect of passing information or authority. Number three is about formal rules and regulations. So a set of standardized rules govern operations and decision making to ensure uniformity and control. So it's also Max Weber also advocated for what? Like that you should be able to what? Have rules and regulations that what? Everybody behaves uniformly. If we have rules that govern a given, for example, we have something called the Public Procurement and Asset Disposal Act of 2015. That document basically controls all procurement officers in public sector, whether you're in the parastatal, in the county government, national. So that means what? There should be a uniform behavior of procurement officer irrespective of the department, of the parastatal, or of the public institution you are in. So basically, look at that. Then number four is what? Impersonality. So tasks and decisions are performed without personal involvement or resume, ensuring objectivity and fairness. So Max Weber also said that what? Anytime you're given a job to do, be in person. Means what? Don't do a job, look at the benefit you get from it. Or like, for example, if I'm doing procurement, then I say that, okay, I talk to a supplier, hey, I'll give this 10 and then what? Give me a kickback of 10%. That is that's conflict of interest. So basically, say that what? Say that tasks and decisions are performed without personal involvement or you don't favor, ensuring objectivity and fairness. And then number five is employment based on technical competence. So if you want to employ somebody, look at, are they technically able to carry out the task well? So that recruitment and promotion are based on qualification. So if I want to employ somebody, or I want to recruit somebody, I want to promote somebody, I must look at number one. What is your qualification? What is your experience? And merit rather than what? Personal connection means what? You employ somebody because it is from your tribe. You employ somebody because it's a family member. You employ a person because of your friend. You are subjective. You look at other factors. Being a friend doesn't qualify you to get a job for me. Being a relative is not a qualification of getting a job. If you're going to be my relative, then compete with everybody. If you're the best amongst them, then I choose you. So I can even support. I can justify your inclusion. Sometimes, you see, if my brother applies for a job and is the best among the people, that's how I apply for a job. So should I deny my brother a job because he's my brother? But in case I'm being questioned, can I justify why my brother got the job? If people are doubting me, then basically what do? I can excuse myself. I can declare confidence that what among the candidates being interviewed here, I have my brother is amongst them, or I have a kin here. You don't say your brother. You see your brother, your sister, you're narrowing down. You say, I have a kin here, I have a relative that is what is coming for the interview, so that you don't know whether it's a male or a female. So because of that, I'm not going to be part of this interview panel. So you excuse yourself so that, and if he still wins, still get the job, then basically you didn't have any influence. But what normally happens in this kind of arrangements is that CEO knows that his brother is there, or his